what we saw through COVID or started through COVID with the remote employment where everybody wants to work someplace else or not come into the office 5 days a week, that's not changing much in this industry. There's a number of roles and positions that if you want to hire in this industry today, you have to be accommodated for it. And if you're not going to be able to hire.
HOA Insights, common sense for common areas, exists to help all 2 million volunteer board members nationwide have the right information at the right time to make the right decisions for their future. This podcast is sponsored by 4 companies that care about board members: Association Insights and Marketplace, Association Reserves, Community Financials, and Kevin Davis Insurance Services. You'll find links to their websites and social media in the show notes.
Welcome back to HOA Insights, Common Sense for Common Areas. I'm Robert Nordland, and I'm here today with a special guest to talk about how individually and collectively volunteers are carrying this entire community association industry forward. This is episode 33, and before I make the introduction to our guest expert, I want to encourage everyone to check out episode 32, which was a great discussion with regular co-host and insurance expert Kevin Davis on the growing number of claims for reputational damage. You may wonder, what's that? And I assure you it's fascinating and something you need to know about. If you missed any other prior episodes, take a moment after this episode to subscribe to this podcast on any of the most popular podcast platforms. You can also listen from our podcast website, www.hoainsights.org, or watch on our YouTube channel. And of course, if you have a hot topic, crazy story, or a question you'd like us to address, leave us a voicemail message at 805-203-3130, or send us an email at podcast@reservestudy.com. Today, it's my pleasure to welcome Vishnu Sharma to the program. Vishnu is at least 2 things right now. He's a CPA with 19 years spent serving the community association industry, first as founder of Sharma & Associates, and for the last 3 years as the head of the financial services division of Enumerate LLC. That's a large association management software company. I met Vishnu through our years serving on the CAI's National Business Partners Council. And for those of you unfamiliar with CAI, it's our industry's largest trade organization. So Vishnu and I eventually termed out of our positions after spending a few years together. And while I moved on, Vishnu moved up. And he's now CAI National's chairman of their board of trustees. In other words, the top leader at CAI. So Vishnu, welcome to the program today.
Hey, Robert, so grateful to be here. Thanks for giving back and doing what you do with this podcast. It's incredible to be providing this level of information back to the community.
Well, thank you for joining us here today. I thought we could get started with today's program by asking what got you going serving the community association industry about 20 years ago.
So I think like everyone in this industry, it always seems to be a second or third career for us. I started out in corporate retail, went through my 3rd corporate reorganization in about 6 years and kind of had enough of that world. Joined a local CPA back in 2005 who had a very small practice. We started out with 2 communities, 1 bookkeeper in 2005.
I think that's the definition of a small practice. 2 clients?
Well, he had an audit and he had a tax practice, but for the community association side, it was brand new, it was nascent for us. He had some dabbling in it, and it was just figured, let's try this and see. There was just an underserved market out there for quality accounting, but also far more importantly, the segregation of duties that we saw with my background as a CPA and a certified fraud examiner. Walked into this industry and saw that management was doing both accounting and management, whether they were doing it in-house at the association level or they were doing it through a professional management company. And in our perspective, management, accounting, and the board should be 3 separate pieces with 3 separate roles, and no one should mix the 2 of them, with management being, the person or the group that would help you and assist you in selecting that business partner to work with, scope of work, approving invoices and such. Accounting would be the only people who have the ability to touch the accounting program or make any changes in it. And that gives them their independence, and they're reconciling and preparing the monthly financials. And then the board ultimately is the signer. They're the ultimate signer to everything at the end of the day. So it gives you three separate roles, segregation of duties. It's a perfect model.
And you have, like you said, the board is signing it. The manager is perhaps guiding the vision and handling the correspondence, orchestrating the vendors that are coming to mow the lawn, clean the pool, do all those other things, and pushing out the invoices and collecting the accounts receivable. Someone's got to be able to bring order to that and say, hands off, I got this, and not have someone who's best at communicating to a disgruntled homeowner be the one who's also responsible for putting the monthly financials together.
It's a very complex industry. I like to tell the joke that in this industry of accounting, we have three schools of thought. We have not-for-profit, for-profit, and governmental. And those are the three pillars that make up the accounting industry. And my running joke is the gods of all three of those one day walked into a bar, got rip-roaring drunk, and on the back of an envelope created CIRA Accounting, which stands for Common Interest Realty Associations, which governs condo, HOA, co-ops, etc. We have an amalgamation of rules from each of those three schools of thought. So we aren't a clean body of accounting for any one of those schools. We're an amalgamation where we have a fund balance on our balance sheet, not retained earnings like you would have for a for-profit. But we do have to maintain fund accounting, keeping track of the reserve, the operating, and potentially a special assessment. We have a income statement. We don't call it a profit and loss. We call it a statement of revenue expenses. And we have a gain or loss at the end of the year. We don't have net income because we're not a for-profit entity. So therefore we can have retained earnings or net income.
And it's that combination where people wonder, is a community association a government? The answer is no. Is it a club? No. It is a mandatory membership, but like you say, it's not a for-profit, although hopefully every homeowner's homes are rising in value. Incredible mixture. You are putting your home in the hands of someone else, so you are giving control over to someone else, and that someone else, the entity, will write the rules and regulations, and the governing documents have the overall legal structure for the association. There's so many different things going on, and you can imagine that there's complexity there and a need for having someone who knows the details about how the numbers are to be handled.
Sure. And no different than you would not go to a podiatrist if you had a heart problem. Same thing within our industry of community association. You want to go to an accountant or a CPA that actually practices in this field and understands the nuances of this industry. You mentioned not-for-profit. This industry, we have all of these unique classifications where the confusion always abounds with boards and even managers at times, where understanding that an association may be classified by their state division of corporations as being a nonprofit entity for the purpose of corporate classification. However, from a tax perspective, the IRS does not recognize community associations as not-for-profits. 501c3, for example, which is the most common not-for-profit, 501c3 talks about a charitable organization. That's a classification community association wouldn't fit into. There are, however, civic groups or community organizations that are granted tax-exempt status, 501c4, 501c6 potentially. The only problem is community associations restrict their benefits to their members. And by doing that, they fail that test to qualify for those classifications. So the IRS created a special code, 528, in the Internal Revenue Code just for homeowner associations. And the majority of homeowner associations, condo associations, and the like file under a 1120H, which is specifically designed for community associations that exempts income from the owners per se, but they are taxable for anything they earn. So it gets very complicated, and that's why you have to make sure you're seeking out a CPA, an accountant, somebody who's a professional in the field that understands this field.
It's not just adding and subtracting and what do we have in the bank. There's
Correct.
a lot of... How many months or how many clients did it take for you to realize we're onto something here? We can really provides some help that these associations need.
I think right off the start, I mean, when we started with a couple a couple of large associations, but we were pretty small with just one bookkeeper at the time in 2005 with us, with me doing, the financials and everything. And it's like any other small business where you're kind of doing everything. And then as you get bigger, you kind of specialize into different areas. But I think it took us probably a year or two to get our feet wet and off the ground and understanding. And then you kind of build name recognition. CAI, completely invaluable to me in growing my practice. And I will give a shout out to CAI all day, every day, because
Absolutely.
I started as more or less a solo practitioner, starting in a field. Nobody knew my name, did not have any recognition, and joined the local CAI chapter. And I'm going to give a huge shout out to Andy Rand. The one thing, Robert, I think you know super well in this industry, we all have mentors. We all have people who bring us along and or introduce us to new things. Andy introduced me to CAI. He was going to be president. We've known each other for a while. He's an accountant in the industry, and he needed a treasurer. And he said, "Hey, Vish, you're a CPA. Come on over. You can be treasurer of the local chapter." And I said, "What's CAI?" And he tells me all about it. And that's how I got started. And, 17 years later, it's, I've been blessed to be able to rise to the level of being, the president of the board of trustees and heading up the organization for a year. And it's a gifted year. We get to learn all facets about this organization. But that was my way in that local chapter, volunteering to turn around and say, Andy, I don't know what I can do, but I'm going to help. You tell me what you need. There's a concept I learned a long time ago from my dad. My dad was a community leader, and there's two parts to it. There's a concept of servant leader, and I've always followed that servant leader where just I'm happy to volunteer. You tell me what you need. I'm not coming in to run the organization. I'm not coming in to be the next whatever. You just tell me how I can help, and then what happens is leaders develop within that model as you work through that servant leader concept. The other part is from father to son. I think that we all have, or friend to friend, like Andy with me. You get voluntold a lot. And the voluntold concept is great, where it's like, hey, how about, could you help me out with this? And then suddenly
How about you help me here?
Exactly. And suddenly you're the head of that committee, or you're running that program, or doing whatever needs to get done.
Well, this puts a smile on my face because my story is similar. I remember starting Association Reserves forever ago, a little bit longer in my case, but doing a lot of, before email, smiling and dialing and trying to get our business started. And the first smart thing I did was join CAI and start rubbing elbows with the people who are making this industry work. And for me, it was the Greater Los Angeles chapter, and working with the board of directors, learning a lot, helping a lot, and finding out I can do this, I can help here. And with the reserve studies, people were saying, oh, we need that help. And I fell into a sweet spot. I became chapter president early on. And the person who followed me, I believe, if memory serves me correct, was Kevin Davis. He was an employee at a insurance company, and Kevin Davis is now a widely known national provider of insurance for community associations, and he's one of the sponsors of this program. So yes, it's learning from the people around you, and sometimes being asked to do something. For the board members here in the audience, why did you become a board member? Well, someone may have asked me, and then they realized, I can do this, I can help. And it's that resonating feeling that you get inside your chest when you realize I can really do something good for the community. And there's just a lot of good things. But yes, CAI was instrumental for us. And Vishnu, I think all the time I spent with you, I'm glad that CAI is under your leadership here in 2023. Well, tell me, we talked a little bit about the things you learned about associations, how you could help. And I think that's a lot of what board members find out. They're new to the board. They wonder, what is this all about? How many hours am I into this? How can I plug in? And I imagine there's some that find that they have their role with the numbers. They have their role with the vendors and the business providers, selecting the people, following up. Maybe they're the ones who help run the agenda, set the agenda for the board meetings. It's a matter of finding out where you fit. And I think that's just a remarkable thing here with this community association industry. So many opportunities to serve. And I just want to, can't cease to just praise the board members who serve tirelessly. What can you summarize a few things, a few helpful hints that our board member audience with us today could learn to make their lives a little bit easier about the monthly financials?
I love being, let's go back to The Godfather. I love being consigliere, to my boards, because our job is not just to process the numbers. That's a function. Sharing the knowledge that we build in this industry, being part of CAI, or in my case, my immediate group, which was the Florida Institute of CPAs or the American Institute of CPAs as a CPA, but within your world of reserve study, or the attorneys within their world, we all bring that professional skill set and knowledge, but we learn about the industry. I happen to be in South Florida where, I could tell you so many things about concrete restoration way beyond my world of accounting, because I've sat in and I've listened to any number of board meetings where I've listened to the engineers and the project managers talk about this, or the insurance guys explain about the insurance. I never sit through a meeting with an insurance rep and do not walk away having learned something new about that industry, because it is so complex. So we have the ability, being able to sit at the table and explain and enlighten our boards. And I think that's what the professionals that you have, whether it's your CPA or it's your whatever professional you're going to deal with at a particular time, they are a wealth of knowledge if they're practicing. And you should be, as a board member, looking for those business partners. And I'll make a quick plug, a distinction that we like to make within the industry of CAI. We make a distinction between a vendor and a business partner. We don't call vendors in our world of CAI. We call them business partners. And the distinction we make is a vendor is a guy who shows up and they're there for a one-hit deal. They're going to sell you something. They're going to be willing to take what they get and then move on. We're business partners in CAI, and we're lifetime partners. We want to be there tomorrow. We want to be there next year. We want to be here 5 years from now. So we're never about the short game. We're always about the long game. We want to partner with you. We want to be that resource that provides the skills to you, right? And that's what you're looking for. So my first kernel of nugget, when you're picking a vendor, pick a business partner. Pick somebody who's deep in the industry, understands what your product is, and is willing to give back to you and partner with you long term to make sure that you're going to be successful 3 years, 5 years down the road. On the financials itself, don't focus on net income per se. Everybody focuses on net income. It says, I have a gain or loss. That's important for a budget standpoint, that you're trending and you're looking at how you're performing this year. And that's important, and that's a start. The second thing, however, I'd say to that would be, what's your cash position? Because too many associations take a net income number and equate that to cash. But just because I'm running a net gain for the year of $75,000 or $100,000 doesn't mean I have that cash in the bank, right? Because I may have a high level of receivables. I may have a deficit that I've been carrying for years. This morning I was on a call with one of my boards, and we were having a conversation about special assessments in general, but I was kind of guiding them, saying, let's look at your cash position. Their cash position, they had $97,000 in the operating bank account. However, what I try to guide all my associations are, look at the prepaid maintenance. It's listed under liabilities on your balance sheet. Prepaid maintenance means you've collected future assessments from owners that's already sitting in the bank. And you need to take that away from your cash on hand to get a true sense of your cash position. So if I have $97,000 cash in the bank, but I have $125,000 in prepaid maintenance, yep.
You're negative.
I have a negative $28,000 cash position, which is what I told them this morning. And my recommendation was, when you're doing your next special assessment, which they're planning one, put in $250,000 into that special assessment, get your cash back in the positive. You'll get your annual audits and your reviews at the end of the year. Usually you're getting advised by your CPA that you should have between 1 to 2 months worth of cash on hand at the end of any given month. So I would tell you that cash on hand should be net of prepaid, because prepaid isn't your money to use. That's you've got expenses next month that need to be used with that money to pay those bills.
I like that. I like that clarity. Well, let's take a quick break here. for a message from our sponsor, and we'll be right back.
Hi, I'm Kevin Davis, the president of Kevin Davis Insurance Services. Our experienced team of underwriters will help you when you get that declination. We provide the voice of reason, someone who will stand by you. Our underwriters bring years of knowledge to our clients that can't be automated by technology or driven by price. As a proud ANWINS company, we bring true value to your community association clients. We are your community association insurance experts.
Vishnu, when you were talking about the distinction between vendors and business partners, it brought me back to when my kids were in school, and we were just amazed by the teachers that made them fall in love with a subject. And sometimes I measure the people around me, the people who support me and Association Reserves, by can they take something complicated and make it simple? I think that's what a business partner can do. Rather than just try to impress you with their knowledge, they can say, okay, this is what's good for you. And I see that in a business partner, that they can say, okay, here's how I can help you, your association, get through this area. That could be an insurance consultant, that could be accounting and CPA, that can be a reserve study provider, that can be an attorney, someone who helps navigate the association forward and not just overwhelm you with decisions, because I think our board member listeners know they got plenty of decisions. What they need is help.
Look, the skill sets that are on boards are amazing, as you've said, because they are volunteer, and it's an unsung, underappreciated role. And I say this knowing, because I've served as my president for my condo association for 2 years and managed to special assess my own self $42,000 for major repairs that needed to be done, which didn't go over well in my own household, much less the rest of my unit owners. But it's a thankless job, and you've got to have the courage and the fortitude to do what's right in the best interest of the association. Troubling signs for me is when the board sits down at budget season, which we're right now in the heart of, and the first comment that I get is, yeah, we're not raising maintenance this year. You've already started off in the hole. It's like, that can't be a conversation we have at the set. Let's see what the actual expenses are, because right now we're going through so many crises in the country, across the industry. Insurance in the state of Florida, we're doubling and tripling insurance costs. I have associations that paid $300,000 2 years ago that are paying $900,000 for the same policy.
Yeah. How can you do that without an increase in homeowner assessments?
Correct. And we have other issues where we have mandatory reserves that are going to kick in 2025, 2026. And associations now have to go ahead and figure out how they're going to do it. And it's becoming millions of dollars in special assessments that are being passed, because too many buildings have chosen not to account for the work that needs to get done or set that money aside. So that bill is coming due, and it becomes a game of hot potato or musical chairs. The poor person who's sitting in that chair or owns that unit, when that bill comes around, that's the person who picks up the tab. Somebody lives in a unit for 18 years, sells out, the new guy buys in. Suddenly the next year, there's a roof special assessment, there's a concrete restoration special assessment, and now they're looking at a bill of $5 million or $7 million. And that's what's happening right now across the industry, not only in South Florida, but across any number of states.
Yeah, well, the two things I want to follow up on that. You gave the illustration of the prepaid assessments for maintenance. That is not cash that the association has to work with. It's there for something specific. And so just like you mentioned with reserves, there, you can't just look at the cash position. Where are we trending? Where are we going? And appreciate that there are responsibilities the association has. There's money that's already allocated to things, and they need to be moving the association forward. So I'm wiggling in my chair because I'm getting so uncomfortable. But then the big picture, we see the same thing with reserves, with the board saying, oh, we've got $500,000 in reserves. Let's use that to make up for our shortfall or to pay our insurance premium for this year. And I have to say, that is a foolish decision, folks, because that money is there for the roof. It's there for the asphalt. It's already allocated to something else. It's not available cash for paying bills. You need to ask that from your homeowners and raise the homeowner assessments. So thank you for sharing that. That's the reality of looking at the numbers. Numbers measure progress. They measure your benchmarks. But I wanted to also twist this a little bit and go, you said the things you're seeing in Florida. From your position leading CAI National, what kind of bigger trends do you see across the country? What kind of insights can you give to our board members?
AI is coming to the community association industry. It'll come to you through your business partners, technology. I'll tell you, our firm, we're looking at a AI digital assistant that answers calls. So we did a demo of this back in April. We picked 2 associations, about 1,000 units, and we turned on this AI feature that you have the ability now to, when you call in, or you go straight to it and using your phone via text, and it recognizes your phone number that you're calling in on off the database that we already have. It automatically recognizes you, acknowledges you, and says, "Hello, Mr. Smith. How can we assist you? We see that you have 3 units across our entire canopy of associations. Which one, 2, or 3 would you like?" And it will go ahead and you can ask it, "What's my balance? Where do I send my payment? When was my last payment received?" You can ask for a copy of your ledger. It will send you a PDF version via text of your ledger. So we looked at that software as a way to be able to serve our association unit owners way faster, way better at their level, because so many people are into texting now and they want fast, immediate results. That's the way to do it. The demo came back, Robert. We had 791 calls responded to. 91% were resolved by AI.
Nice.
Yeah, but that's what's coming. That's a big trend in the industry, and you're going to see it in different forms in different industries as it branches out. DEI, and you can call it whatever you want. Remote working.
Wait. DEI, I think of that, help me, diversity,
equality,
and
inclusion.
Inclusion. Got it. Okay.
Right. So with that, it's a recognition that you're going to have, doesn't matter what state you're in, you're going to have people that are going to want to be, especially after COVID, they're going to want to be recognized for who they are, what they are. And you're going to have to, if you want that employment workforce, unemployment is 3.7% in the nation. Depending on the state that you live in, the city that you live in, it is way less. Broward County, Fort Lauderdale, Miami, we're 2.6 unemployment. And if you want somebody in the accounting field, I laughingly joke that we're negative because you cannot find anybody in the accounting field to hire. The Wall Street Journal had a huge article about 2 weeks ago, the diminishing number of students that are going into this industry for a number of reasons, pay being one of them. So there's some changes coming about in employment. I will tell you that what we saw through COVID, or started through COVID, with the remote employment, where everybody wants to work someplace else or not come into the office 5 days a week, that's not changing much in this industry. There's a number of roles and positions that if you want to hire in this industry today, you have to be accommodated for it. And if you're not going to be able to hire. The other thing is labor inflation. I will tell you candidly, in my firm, we're looking at 25 to 33% increases from pre-COVID to today for the same roles and positions. We're seeing it across janitorial, landscaping, valet, within all of our associations in South Florida. They're all up 35 to 50% for what they were paying pre-COVID to what they have to pay today just to find people to work. Because once you have Walmart, Target, the banks at now $18, $20, $22 an hour to start, all that's going to rise. And I'm using South Florida numbers. You can translate that to whatever it is in whatever part of the country that you're in, but just know there's been significant inflation in there. So that's another huge trend, is both managing that cost and also managing your workforce, of being understanding that they're not all going to want to come into that office anymore. And how do you manage and get that same level of efficiency and productivity out of your team while they're remote?
Well, let's, I guess the two realities of that is, number one, it's going to make life in a community association more expensive because the costs are going up. And I get the same heebie-jeebie feeling when someone says we don't want to raise our assessments. And I realize, have you heard there's been inflation in the last few years, and things are getting more expensive. So you do have to seriously consider raising your homeowner assessments. It's just the reality. And the other part is community. We've been talking about this being the community association industry. And if people are not going into the office, they're at home. And in our industry, that means they're in their unit more hours per day. They're in the hallway, they're in the elevator, they're walking their dog. They're hearing the kids in the tot lot outside that they never heard before because they were gone. And rubbing elbows, and just, I think we need to be very conscious that we are building communities here. And that's neighbors looking after neighbors. And I trust that is new smiles, new faces, new friends, new opportunities to talk about the latest big game last night, to look after one another, to do a favor for one another. I'm going to the grocery store. Can I pick up something for you? Boy, so many opportunities to be community. And I love that part of our industry. Well, Vishnu, I'm looking at the time, and I want to thank you for joining us today. It was great to have you on the program, sharing your insights on accounting, on CAI, on the big picture. Any parting thoughts for our audience?
As a board member, as a manager, I'll just say this. I mean, Robert, we've said this before many times. Managers are one of the toughest jobs in any industry. They take it from all sides, and but a manager and a board member, that's got to be a link. That's got to be probably one of the most important out there, because you have to be able to have somebody that is going to delegate and be able to get the work done that the board needs, because the board's there to set the vision and the manager's there to execute, and you need that relationship. So super vital piece that needs to be in place.
Yep. Fantastic. I agree with that so much. Okay. How can our audience get in touch with you if they want to follow up?
They can reach out to me directly at vishnu.sharma@goenumerate. It also works vsharma@goenumerate.com. So that's probably the easiest way to get a hold of me by email.
Fantastic. Well, we hope you learned some HOA insights from our discussion today that helps you bring common sense to your common areas. We look forward to having you join us for another great episode next week.
You've been listening to HOA Insights, common sense for common areas. You can listen to the show on our podcast website, hoainsights.org, or subscribe on any of the most popular podcast platforms. You can also watch the show on our YouTube channel. Check the show notes for helpful links. If you like the show and want to support the work we do, you can do so in a number of ways. The most important thing you can do is to engage in the conversation. Email your questions or voice memos to podcast@reservestudy.com, or leave us a voicemail at 805-203-3130. If you gain any insights from the show, please do us a huge favor by sharing the show with other board members you know. You can also support us by supporting the brands that sponsor this program. Please remember that the views and opinions expressed by the podcast do not constitute legal advice. You'll want to consult your own legal counsel before making any important decisions. Finally, this podcast was expertly mixed and mastered by Stokelight Video and Marketing. With Stokelight on your team, you'll reach more customers with marketing expertise that inspires action. See the show notes to connect with Stokelight.